Lesson 4. The basic components of a Japanese candlestick chart. Now, as you can see here, this is what is referred to as a candlestick or a Japanese candlestick. It is used to depict price movement during a certain time period. Now, the most commonly used Japanese candlestick time period is the day chart, but there are many different time frames, all the way down to the 1 second, that we can encapsulate this data. So what actually is in a candlestick? Well, as you can see here in this depiction, a candlestick is depicted in 4 different pieces of information. We have the high, which is here. This is price. This is the highest point during this candlestick's time period that price achieved. All the way down here is the low, and this is the low point price reached during this time period. The body of the candlestick represents the open and the close of the candlestick during that time period. Each candlestick also can tell us whether or not the candlestick was bullish or bearish based on the color. So as we've seen before, the high, the low, the open, and the close, those 4 pieces of information, depending on where the open and close took place in relation to the price, can give us the color of the candlestick. A green candlestick means that the price opened below the close. So there was enough bullish volume to push price up during that time period. Reversely, if the candlestick is red, that means that the candlestick opened above its closing price, thus signaling a bearish candle because price sold down to the closing price for this time period. Each of the wicks, high and low, just tell us where the price action was during that entire time period. Let's go take a look at TradingView. Now, this is tradingview.com. It is a free website that allows you to look at charts for free and add on any kind of indicators you want up to a certain point. Now, I have left links in the description and lesson notes so that you can go ahead and try this yourself. So from the main page, we can go and look for a symbol. Let's look at SPY. It's the S&P 500 ETF Trust. Launch the chart, and we see here that this is the chart of the S&P 500. You can tell by the symbol section here. You can also search for more symbols if you would like, or a different symbol. With this, you can compare a symbol to this list or to this chart to compare it. This gives us the time frame of each candle. So currently, just like I said in the example, each one of these candlesticks represents an entire day. So if we go to the most current candlestick, which is today, June 3rd, it's still in session. So it opened here, and currently the price is here, and it went up to this and down to this. So currently we have more bullish volume on the day. Yesterday, June 2nd, we opened here, and there's enough bullish volume to close the candle all the way up here near the top end of its wick. As you can barely see any wick on that one. There is a small one, but it closed pretty much on the high of the day. June 1st, we opened up here, and we closed down here because we had enough bearish volume to push the price down significantly. And here is the bottom wick and the top wick. This one here, which kind of looks more like a top or indecision candle, has a much smaller body with larger wicks, which means that we were very close to closing green, as would be indicated by a candle that looks somewhat like this. These are closer to indecision candles where there is really no movement in the market, with a lot of price action, but as far as the sentiment on the day, very close to unchanged. Now, taking this a step further, we can change the time period for each candle all the way down to 1 second. Now, TradingView does allow you to do this, which is pretty interesting, but as I will show you, second by second needs to be on the premium plan. The lowest you can go with a non-paid account is actually in the minute charts, which for most people is more than enough. Unless you are trading very frequently and very skillfully, the 1 minute chart doesn't give you enough data, I feel, to provide you with enough information to make trades. Maybe on an entry point, but when you are setting up the trades, larger time frames will give you more information. For example, this is the minute chart, and as you can see, minute by minute, it is very hard to distinguish a pattern. Now, if we zoom out, look at the hourly, we can see that there is a little bit more clarity here, right? More information comes, hourly chart. All this information encompasses almost 3 weeks of data. We can see currently we are in what seems to be an uptrend from May 20th, almost 2 weeks ago. So will this continue? We don't know yet. We may have to zoom out even further, back to the daily, and see, wow, lots has happened. We may be coming up against a lot of price action here, so we may not be able to make an entry on either the short or the long side. We might be in a period of equilibrium, consolidation, and each of these charts, time frame wise, will give you more information of the overall sentiment of longer term positioning of other market participants. When we look at shorter time frames, like the 1 minute, we see very little. This is just today, not even half an hour yet of data. It's very hard for us to make entries unless we have the entire bigger picture, and our trade thesis on what we plan to do really depends on all the information that we can gather. Thus, the reason why we use charts and technical analysis. That is the basic of the candlestick chart. Please review this section as many times as you need to gain a better clarity on how this chart looks, what this chart means, and of course, how you can use it in your trading.